An interesting stat about the stock market that for the second time in the last 100 years, the stock market has done something. That's at the end. That's my hook. It's a good one though, and I know normally we don't talk a lot about the stock market, but we're going to today. So let's get into what's going on. For rates are better. I mean, it may not look it here with a 6.59, but check this out. This is the 10-year Treasury, and for the last week and a half-ish, we've had at least rates coming down a little. So we will take it, guys. Like we'll take what we can get. We're not going to get greedy here. The reality is a lot of that's just because this what's weird. Rates went up because oil went up, and now that oil is up, that's part of the reason why rates are coming back down. Because at some point, high oil prices make everything like squashes demand. Like people are going to think twice about going on vacation when costs are this much. So, for that reason, like inflation numbers, the PCE, which I'm not going to report on here, came out to where it's like actually in line with what they're expecting. And so that's part of the reason why demand has gotten crushed. And that's why rates started coming down a little bit. But to nobody's surprise, refi demand is fallen because rates have gone up. But the reason why I included this stat, it's just for this article is because it's just some of the stats in here. So, for example, the average purchase loan, so not purchase price, the loan itself hit a record 473,000. I thought that was pretty amazing to me. That's a big number. Here in Dallas Fort Worth, that's not even our average purchase price yet. That's the average loan in America. VA applications fell 34%. Not a big deal outside of saying that's. I had no idea the VAs were refinancing that much because typically you don't see them doing cash out. And then the other stat there, the fifth bullet point, refis fell to just 38% of the market. That to me blows my mind. I know I see the stats, but it is not the mortgage market team, unfortunately. And for better or for worse, we're not 40% refis. So to me, that's the rocket mortgages of the world and people that are probably refining when they shouldn't. That Goodman's fell. No big surprise, right? Like, in other words, everything's getting more expensive again with oil prices going up and just overall what's happening. But the biggest, I did two yellows, one darker. Two-thirds of customers are cutting back spending. Not a huge surprise, but the big one, and this, for all of us watching this in the housing market, 50% of the market of consumers are going to delay big purchases. Guess what? A house is a big purchase. Not ideal. The other side of that is, who's not hurting? Anybody in AI. So San Francisco has seen their sales price hit 6.7 million for the median home price in San Francisco, and it's up. The pending sales are up almost 50%. So if you're in the AI space, congratulations, you're killing it. The military, again, highlighting some of these facts that I thought were really interesting. I did the red print just because I wanted red, white, and blue. It doesn't look real good, but the military households, that's one out of five buyers. So 20%, 19%. 20% of buyers made up military households. So I know, again, the mortgage mark team is not hitting the 20% mark. We need to hit that. We're going to talk about marketing, what we can do that. But here's the other part when we talk about that 41% of these purchases were over 500 miles away. So my question to you, realtor builders, what are you doing to market to veterans that could be moving 500 miles away from you? Right? There's one thing about being local, but when one out of five buyers is military, holy smokes. And the other part that I thought was interesting is the active military buyer, the median age was 38. It says only 38. To me, that seemed really high. So here's the breakdown. You can see there's just buyers in general. And then the little blue lines is the armed active in the armed forces. So 36 to 45. I mean, I'm 46 years old, so I'm in the 1%. But the reality is 36 to 45, that's still a lot of buyers in the VA. So anyway, just something to think about for marketing and what you're doing. And then also, we've hit on this once or twice, but this stat came out. Maybe it's just because the algorithms are feeding it to me. But the reality is, look at married couples. We get it. Married couples, two incomes makes makes up a lot of the buying power, obviously. But look at the yellow lines. The single women, especially the 18 to 26, that second category. There are more single women buying from the ages of 18 to 26 than there are married couples. Now, it kind of, but still, what a big number when you look at this for the single women. compared to the single female or the single males. I mean, it's double in most categories, if not triple on some, like age 46 to 60. That is crazy to me. So all my single ladies, call the Mortgage Mark team. And now let's have some fun. This is the stock market. I know it's really ugly stat or ugly slide. I get it, but it's helpful. So for the second time in 100 years, the CAPE. So I ought to be honest. I was like, wait, a CAPE I've forgotten long ago. What I knew it long ago, but I forgot. It is the cyclically adjusted price to earning ratio. So in other words, you take the stock price, you put it over the earnings. That's the P ratio. And so it tells you in there they adjust it for a whole bunch of stuff, inflation and all this other stuff. And for the first time, so here's the chart for the first time in one that whatever 40 is at 39.58. And you can see the only other time we hit it was right in the 2000s before the bubble. Well, whether there's an AI bubble or not, to be determined. But it's certainly interesting. I just thought I'd share that with you. And along those stats, which I missed up above, I didn't highlight those. Just since March, and I'm going to shoot from the hip, I want to say the Nasdaq is up over 20%. I think the S&P index is 18%. It's just since March. So you can kind of see that here reflecting these numbers. It's incredible. I saw this morning, Trump administration, Scott Bessent there, the Secretary Treasurer. He is the Treasurer Secretary, however you want to say that. He's holding up a $250 bill with Trump's face on it. So I did not know this part. Apparently, there are two mandates. The president can't be living to be on the money, and the money in God we trust. So supposedly, there's a movement trying to get it to where we can eliminate that first part to where a living president can be on the U.S. currency. And the reason why it's 250, supposedly, is because the United States is turning 250 years old. So we'll see if she passes. I just thought that was interesting. The listen lock allows you to do that. You can promote artificially lower rates through seller concessions. It's pretty slick. Check it out at themortgagemark.com. Just type in listen lock and it'll be there for you. And then this is interesting. This was what the team chose for the meme of the week. And what I just showed you about the stock market and those stats is really kind of flipped. So while this is funny, based on what I just showed you, not entirely true. List of reasons why you should invest in the stock market over real estate. Well, since March, you should have. There's really good reasons to have been in the stock market. And this comes from Miss Lisa. We appreciate you. She was just super sweet. We loved working with her. And go Tamara, go. Yeah, she says you want to express your deepest gratitude for pairing her with Tamara. So I knew the two of them would get along great. And Miss Lisa is a sweetie, and we appreciate the kind words. And you too can give kind words or just see what we're doing, what other people are saying. Do the normal guys. You know what to do. Follow, share, subscribe, all that fun stuff. And as always, thanks for watching. I am sitting down today, and I am in a t-shirt. It's Friday morning early, and my legs are tired. So I'm getting old. Here I am. But with all that to say, have a great rest of May. We will see you in June.